The Wall Street Journal recently reported, somewhat in awe, that Boston Properties had secured a $230 million construction loan. So apparently some banks are lending, but how tough are the terms at this point?
I saw National City folks. I think they're giving money away outside. Anybody wants to do that? Huntington, where's Huntington Bank? They have a big safe outside. I think talking to some of the bankers, banks do have the money. I think this stress test is going to, I'm not really sure even it's scientific, but it's going to at least figure out who needs more additional capital or not. On the commercial side, banks are lending, but it's very tough. And I think my observation is they're lending to their good customers. If you don't have a banking relationship with them, prior good history, I don't think they lend. So they're very, very limited money out there, and they're going to choose the clients that they want to keep, that they trust, and they have a good relationship. It takes longer. I think the credit is driving the ship. Its rates are set by them. There's not a lot of negotiating because either take it or there's no other alternative. But I think it's also one thing that we haven't really seen, that I haven't seen personally, is the commercial real estate. I think the banks have been working with the commercial clients to work out some of the existing real estate deals, but I'm going to assume that in the second and third quarter we're going to see more banks eventually taking properties back, and I'm assuming that by the year end we're going to have to figure out if they need to flush some of these properties or not. So unfortunately we might see, it depends if you're in a position to take advantage of these, you'll be in a great, but if you are not in a place to able to refinance, we're going to see some more write-offs on the banks. But as far as I know, banks will do deals if there's more equity involved and there's a good borrower with a good long-term relationship with the bank.
Anyone else want to jump in on the flushing sound?
I think you're saying, if you're going to get money today, it's going to have recourse on it, and that's going to keep a lot of people from entering the game, because that's a game changer for most people on whether they're willing to put their personal financial statement up. So, most of what's happening right now, I'm looking at some of my notes here, you've got $300 billion in commercial mortgages that are set to mature between now and the end of 12. And it's anticipated that 40% of those are going to go back in default. And so the banks right now are all preparing to deal with those as opposed to put more money out into that market. So, they have their resources are going to be set aside to deal with the foreclosure and forbearance process on these properties. And the reason the commercial market, the recession is really just starting to have its way with us right now. It just started really towards the end of 08 and the beginning of 09. And what's going to happen is these properties are all, the majority of them are going to go back in foreclosure. The banks are going to have to take them back and deal with property management and deal with trying to dispose of them. And that's when, that's when the investment market will start to pick back up. Because there's money on the sidelines right now. There's vulture funds that have been formed. They've got cash. They're waiting for everyone to start unloading these at discount prices.